Greetings and a warm welcome to the Manifested e-learning platform. Today we are going to begin on a new topic, that is tax liabilities for different sources of income. And the different sources of income include 1. Employment income, 2. Business income, 3. Investment income, 4. Farming income. Then we'll also discuss the withholding tax. These are 5 subtopics. We will be studying a topic at a time. Today we begin with the employment income. Employment income has 5 subtopics, which include definitions. Number 2, taxable cash and non-cash benefits. 3, allowable deductions against employment income. 4, non-taxable employment details, benefits. And 5, computation of taxable income and tax thereon. So these are 5 subtopics. In this lesson, we'll only focus on the definitions. We are going to define 3 terms, which are employment, number 1, number 2, employer, number 3, employee. We are going to define those 3 terms. The subtopic is employment income. And candidates in Kenya, employment income is a significant category of taxable income that is governed by the Income Tax Act of Chapter 470. And it's important for us to understand these 3 definitions: employment, employer, and employee, because this is essential. The understanding these definitions is essential for determining the tax obligations, specifically payee, which is the pay as you earn deductions. Now we will define employer, employee, and the employment in the context of the Kenya tax laws. And the Kenya tax law differentiates between employment income, which is subject to pay as you earn, and business income, which is subject to tax on profits. You understand? So these definitions are very crucial for correctly classifying the relationship between the parties and the nature of the income. So what is the meaning of employment? What is the meaning of employment? Now, under the Income Tax Act, employment refers to the relationship where an individual who is an employee provides services to another party who is the employer under a contract of service, typically in exchange for a remuneration. So employment has 2 parties, the employer and the employee. The employer contracts the employee to provide certain services at a fee, which you are referring to as salary or remuneration. So employment is the relationship between an individual we are calling an employee who provides services to another party we are calling the employer under contract of service in exchange for remuneration. So the employer remunerates the employee for the services that the employee provides. You understand? So that's the meaning of employment in the context of the Income Tax Act. So employment has various characteristics. We have key characteristics of employment in the Kenyan tax context. So the characteristics of employment include The first characteristic of employment is regularity and continuity. Regularity and continuity. What do I mean by regularity and continuity? Now, the work is generally performed on regular basis. Employment work is performed on regular basis, which forms a continuous relationship. So there is a continuous relationship between the employer and the employee because the contract of service is continuous. It's not a one-off thing. No, when you are employed, you offer services day in, day out, week in, week out, month in, month out, year in, year out. It's a continuous process. Regularity. There is also the characteristic of control and direction. Direction. That is a characteristic of employment. The employer has the right to control how, when, and where the work is to be performed. So if you are employed, or if you are an employer, if you are employed, the employer has the right to decide, to control, to give direction on how you are going to work, when you are going to work, and also where the work will be performed. The employer may decide that in week 1, you will go to the field, on week 2, you will work from the office, and so on. So there is that aspect of control and direction. That is a feature of employment. The employer has control and also gives direction to the employee. That's the second characteristic of employment. Then number 3, we have remuneration. 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 The employee receives a fixed salary, wages, and other benefits for the services that they provide to the employer. You understand? That's another feature of employment in the context of taxation. Now, these are the main characteristics. There could be other characteristics, but these are the 3 main characteristics of employment. Now, employment carried as further, we can say, it includes all forms of, let me put it down. So we've defined employment. We've analyzed the characteristics. We can briefly discuss income from employment. Income. Let me put it down. Income. Employment. Income from employment. Now, candidates, the employment income includes all forms of remuneration. They could be benefits. It could be allowances received by an employee from the employer, and that may include salaries, wages, bonuses. So income from employment, it may include salaries, wages. So we are outlining, candidates, the various sources of income from employment. This income from employment could include salaries, wages. It will also include bonuses, salaries, wages, bonuses. That is income from employment. Income from employment could also be commissions and overtime pay. Commissions and overtime. Now, apart from the salary that is agreed between the employer and the employee may also receive commissions or overtime pay. If the employer has agreed with the employee to be working, for example, 8 hours a day, and the employee works in excess of the 8 hours, the excess may be remunerated, and that's what we are calling overtime pay. So overtime pay is part of income from employment. There could also be income in form of allowances. The employee may also receive allowances. For example, housing allowance, transport allowance, entertainment allowance, airtime allowance, housing allowance, entertainment allowance, etc. So there are many different forms of allowances that are related to employment. When an employee is employed, then over and above the salaries and wages, the commissions and overtime, the employee may also receive allowances in form of airtime, housing, traveling, entertainment, and so on. That is income from employment. When you receive allowances, when you are employed, the allowance is a form of income. There could also be other benefits. Benefits in kind. There could be benefits in kind, all right? Like company car, subsidized housing, the employers who provide food. There could be any other benefit that is not monetary. There could be a company car. You are given a company car. You are given any other form of benefit that goes a long way in making your work easier or convenient. Company car, subsidized housing, and so on. 5. Pensions and retirement benefits is also part of income from employment. You understand? Pensions and retirement benefits also form part of income from employment. So that's the meaning of employment. We've defined employment, we've outlined the characteristics and also highlighted income, various sources of income from employment. Let's move on to the second part of the lesson, where we ought to define employer. Employer. B. Employer. Employer. An employer is an entity, and this entity could be a company. The entity could be an individual. It could also be a partnership. It could be a government body. So an employer is an entity that engages another person under a contract of service. That's the meaning of employer. An employer can be referred to as an entity. This entity could be an individual. An individual can offer employment. Could be a company. Company can be an employer. Could be a partnership. You may be also employed by a partnership. Partnership can employ. Could be government body, like the county government, a parastatal, the national government. So this is what we refer to as entity. An entity, an employer is an entity which could be an individual, a company, a partnership, or a government body. It could be a non-governmental organization, right? That does what? That engages another person. That engages another person in a contract of service. That engages another person, and this person is an employee. That engages an employee, right? Or another person under a contract of service and pays them remuneration under contract of service and pays them remuneration or salary. So an employer is an entity that engages another person under a contract of service and pays them remuneration. That's the meaning of employer. So what are the responsibilities of an employer under the Kenya tax law? Responsibilities. Let us discuss the responsibilities of the employer under the Kenya tax laws. Now, the first responsibility, but first of all, is important to understand, and is that under the Kenya tax system, the employer plays a crucial role in the collection of income tax from employees. And this employer is obligated to, first of all, register with KRA. The employer has a responsibility, number one, to register with the Kenya Revenue Authority. That's the first responsibility of an employer in relation to taxation matters, to register with the Kenya Revenue Authority, to register for payee purposes with the Kenya Revenue Authority. Payee means pay as you earn, because it is the employer that collects taxes from the employee on the behalf of the government. Before that happens, the employer has to, first of all, register with the Kenya Revenue Authority. The second obligation is to deduct. The employer has a responsibility to deduct payee, to calculate and deduct the appropriate amount of pay as you earn from employee's salary or wages each month according to the prescribed tax rates. That is the second obligation. Now, the third obligation is to remit payee. Because it is possible candidates to deduct payee and not remit. After deducting payee, then the employer is required to remit payee, to remit the deducted payee to the Kenya Revenue Authority by the 9th day of the following month. So if it is the month of January, if you are paying employees in January, say by January 30th, then the employer is required to remit this payee by 9th of February. So by 9th of February, the employer is required to remit the pay that is deducted from the employee salaries. You understand? That's the third responsibility. Remit pay. Then lastly, we can say file returns. It is the responsibility of the employer to file returns. The employer is required to submit monthly payee returns and annual returns to the Kenya Revenue Authority. You understand? Yes. Filing of returns is the obligation of the employer. So these are 4 responsibilities of the employer in relation to employment income. We are limiting the responsibilities just to employment income and in relation to taxation. So these are 4 responsibilities. So we have defined employer. Let's now define employee. Employee. The last definition is employee. Who is an employee? Who is an employee? Employee. Now, candidates, an employee may be defined as an individual who is engaged by an employer under a contract of service. An employee, contract of service to provide labor. In exchange of remuneration. So an employee is an individual who is employed by the employer under a contract of service to provide labor, all right, or services in exchange for remuneration. Let me put it down. In exchange remuneration. So an employee provides labor or services under a contract of service in exchange for remuneration. That's the meaning of employee. So what are the characteristics of an employee? What are the characteristics? What are the features of an employee? Now, candidates, the definition of an employee is critical for distinguishing between an employment relationship and an independent contractual relationship, because under independent contractual relationship, in that scenario we'll have what we call business income, and while an independent contractor provides services under a contract of service and is responsible for their own tax obligations, an employee is subject to the employer's control and direction. So that's why we have to define clearly an employee, so that we distinguish an employee from an independent contractor relationship. So the first characteristic of an employee is in relation to what we call subordination. Number one, subordination. What does that mean? Now, that means that the employee is generally subject to the direction and control of the employer regarding the work that is to be done. That's why we had control and direction under employment. The employee must always, under employment contract, work under the direction of the employer. The employee has no freedom to decide on what work to do. It is the employer that gives direction on which work that is to be done by the employee. That's the meaning of subordination. The employee is under the control of the employer. 2, the second feature is in relation to risk. The employee generally does not bear the financial risk of the business. Does not bear any risk. If the company makes losses, then the losses are borne by the employer and not the employee. The employee does not bear the financial risk of the business. You understand? Yes. The other feature is exclusivity. Exclusivity is a third characteristic of an employee. The employee works exclusively for the employer and is considered part of the organization structure. So if one is employed by company A, full-time employee, then that employee A, works exclusively for the company. You cannot work for 2-3 companies at the same time, and unless he works on part-time basis in another organization, because of this feature we are calling exclusivity or integration. The employee is fully integrated in the company's structure, organizational structure. You understand? Yeah, so these are the 3 characteristics of an employee. So employees in Kenya, candidates, are subject to income tax on their employment income at the prescribed individual tax rates, and the tax is typically deducted at source by the employer through the payee system. That's why here we said that the employer has the responsibility to deduct payee and then remit payee to the Kenya Revenue Authority. So do you see why we are defining these terms? Yes, we are defining these terms because, candidates, our topic here is employment income, which is a significant category of taxable income that is governed by the Income Tax Act. So it's important for us to understand these definitions of employer, employee, and employment, which are essential for determining tax obligations, specifically the pay as you earn deductions. And Kenya tax laws differentiates between employment income, which is subject to payee, and business income, which is subject to tax on profits. Business income is taxed on the profits. Okay, profit is a business income, and tax is levied on profits from the income from business. So that's the end of our today's lesson, in which you have only defined three terms, which are employment. We've defined employment. We've defined employer. We've defined employee. We've analyzed the characteristics of employment. One characteristic is continuity and regularity. Number two, control and direction. Then there is remuneration. Then we have also in this lesson identified the income from various sources of income from employment. One is salaries, wages, and bonuses. Number two, commissions and overtime pay. Number three, we have allowances like airtime allowance, traveling allowance, housing allowance, entertainment allowance, and so on. The third one is benefits in kind. The employee may also receive other benefits that are not monetary for pensions and retirement benefits. For the employer, we've defined an employer as an individual or a company or a partnership or a government body that engages another person under contract of service and then pays them remuneration. That's the meaning of employer. We've identified four responsibilities of an employer. One is to register with Kenya Revenue Authority. Number two, the employer has to deduct payee, to remit payee by 9th of the following month, then file returns. Finally, we defined an employee as an individual who is employed by the employer under the contract of service to provide labor or services in exchange of remuneration. There are three characteristics of the employee. One is subordination. The employee works under the direction and control of the employer. Then there is also the risk. The employee does not bear any financial risk of the company. If the company goes down, then he does not bear any risk. Then lastly, there is exclusivity and integration. The employee is fully integrated in the organization structure of the organization. So that's the end of our today's lesson on employment income. Thank you. God bless you. Bye-bye.